and I'm here to tell you about Quarter 1 2026. You've heard of the phrase, a game of two halves? Well, we've had a quarter of two halves. Might seem like an unusual phrase. The first 6-7 weeks of 2026, markets continued many of the trends that we saw in 2025. A lot of rotation still into European shares, into Japanese shares, all doing very, very well. The AI boom still continuing, huge amounts of capital expenditure taking place as well. We've also seen the emergence around that time of major geopolitical events. We saw the capture of the president of Venezuela. We saw murmurs of issues to do with the Middle East and Ukraine starting to get louder and louder, and then we saw the conflict in Iran, and that has had a huge impact on markets. So the parts of the investment world that did particularly well probably sold off most in the second half of this quarter, and the parts that had been suffering are really been left a little bit behind by the markets. Things like energy shares and so on started to do really, really well. The dollar that we talked about last year that had weakened got much stronger in the last number of weeks, up about 2% over that time. And we've interesting one I thought was that gold that we've been talking about so much in investment terms over the last year or so really has lost its shine in the last number of weeks and lost about 15% of its value. The one part of the investment world that we all are hearing about so much is oil, and the oil price has been rocketing right throughout the month of March in particular. So many different themes playing out in the investment world. Even though we've had some major setbacks in markets, most markets are still performing reasonably okay, and even markets like the UK and the Japanese market are still strongly ahead so far this year. So one of the messages we continuously give about investing is the importance of time in the market and diversification, and investors that have that money, their money spread across many different geographies, but also across many different industry sectors through well-diversified portfolios, not putting all of your eggs in one basket. Those are the ones that tend to be best served over times like this. And we see the folly again and again of people getting a little bit nervous when markets start to get more volatile. They trade up and down. Just showing you on screen here under Exhibit 1 what we saw from the COVID crisis, and you can see markets certainly did sell off around that time. We saw that very healthy rebound afterwards. You can see the many events that markets navigated thereafter as well. But it's not just in more recent times. Here in Exhibit 2, I'm showing you a much longer time period going back to the early part of the 20th century. Again, we've had wars, we've had conflicts, we've had oil crises time and time again. But those that remain invested throughout these times are usually the ones that are best rewarded. As always, if you want advice and you need help in this regard, please get in touch with us here at Fairstone Ireland. Thank you for your time.